makers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Apple unveils new AI features, including the partnership with ChatGPT. Elon Musk responds by threatening to ban Apple devices from his companies over security fears. More record highs on Wall Street as traders position ahead of U.S. inflation data, and, of course, the Fed decision. Plus, UK unemployment rises unexpectedly to the highest in more than 2.5 years, while pressure eases for higher private sector pay, suggesting inflationary forces are cooling. There's a lot going on, so good morning, and let's take a look at the European markets map. Now, we're still trying to figure out exactly what the calling of the election in France means for the CAC 40 and some of the businesses. Yesterday, we saw quite a lot of, I guess, anxiety, not only in bonds, but also in equities. Today, we're seeing a little bit of a lift. Now, there's more calm, certainly, than there was yesterday, and this is after a pretty hectic day yesterday with heightened political risks really trying to reverberate across asset classes. The focus now firmly on two things tomorrow: U.S. inflation data and the Fed's interest rate decision. Wednesday is going to be a very, very big day. There is also a French bank, Société Générale, extending some of the losses after Reuters reported that the lender's struggling to reach a deal to sell its securities services unit. Euro dollar 107.61. You can see S&P futures practically unchanged. And then for good measure, let's always look at the U.S. at 10-year yield, 4.4453. So onto Apple and its unveiled, its long-awaited suite of new AI features, including a partnership with OpenAI, the maker of ChatGPT. Now, the iPhone maker is betting that a personalized and understated approach to the technology will win over customers. It's a high-stakes bid to catch up with rivals in the booming AI market.
Recent developments in generative intelligence and large language models offer powerful capabilities that provide the opportunity to take the experience of using Apple products to new heights. Introducing Apple Intelligence, the new personal intelligence system that makes your most personal products even more useful and delightful.
Well, let's get more on the story with Matt Bloxham from Bloomberg Intelligence. Matt, you were here yesterday. We were talking about what we could expect from this event. And now they're trying to make AI, I guess, work for everyone. They're trying to retake the spotlight. I mean, have they done enough? Is it exciting enough?
I mean, it is exciting, but I think all of they said yesterday had been very well flagged, so there was nothing incremental that nobody was expecting. You know, this is a very broad range of updates across all the familiar apps that you would use if you're an Apple user, so messaging, email, Safari web browser, notes, the whole suite, and these are going to be kind of meaningful enhancements to how those products work, you know, offering you prompts, allowing you to kind of rewrite an email reply to somebody, for example. So lots of familiar generative AI features all embedded into those applications. So I think it's a bit like a few years ago where it was like, are people going to upgrade to the first 5G iPhone? This is the first AI iPhone, and so are we going to see this kind of super cycle that everybody's talking about in terms of smartphone upgrades? Yeah. That's still a big question. I think clearly it's going to prompt a lot of people to upgrade to a new iPhone because people have been stretching out how long they keep their phones. And this is a significant new feature that you can only get if you've either got an iPhone 15 Pro or Pro Max or you buy one of the new devices. So it's not going to be backward compatible for the vast majority of the iPhone user base. So people think, well, I want generative AI, I need to get a new phone.
So Matt, you can basically, upload it on some of the current models that you have, or otherwise you need to wait for the new ones in September?
The only models currently that it'll work on is the 15 Pro and the 15 Pro Max, which is the very top end of the current range. All of the other iPhones out there won't support the AI functionality.
Elon Musk was pretty punchy.
Yes, he was.
He was really
Never misses an opportunity.
What do you make of his threat?
Yeah, well, look, I mean, I think there's a lot here. You know, he's got an ongoing feud with OpenAI. He's got his own rival to OpenAI under development. It was an opportunity to kind of make some noise about his views on AI. He's obviously been quite an outspoken critic of the risks of AI generally. I think there are some legitimate concerns he raises about privacy issues around how we're using generative AI products and the fact that these platforms can potentially suck your data unwittingly and use it against you without your permission. Clearly, Apple's gone out of its way to protect user privacy in everything it's doing here. So I think, you know, whether the integration of ChatGPT into iOS 18 is really what Elon Musk talking about is unclear, but it clearly allows him to kind of have some relevancy within what's clearly the topic of the day, if you like.
I like it. The topic du jour, Matt. As always, thanks so much, Matt Bloxham there from Bloomberg Intelligence. Now, let's talk to Sharon Bell, Senior Strategist at Goldman Sachs. Sharon, thanks so much for joining us. So we have you for 20 minutes to try and figure out what is going on in the world. I mean, when you started with AI and on the back of some of the technology that we see in Europe, is AI still going to be the main driver for American markets, and what does it mean for Europe?
I mean, obviously AI has been such a crucial driver, but it's not been the only driver. And I would say you take Europe year to date, the bank sector has been the best performer by far, and that's definitely not AI driven. So I do think it's broader than that. But obviously people love this thematic because it means it's going to be a big driver of growth. We see Apple developing new products, other companies developing new products, etc. So it's going to be a huge driver of growth. I have no doubt about that. But it's not the only area. And I think, information like politics, activity improving, all of those things create much more market volatility than just AI.
Yesterday, we saw, markets really taking badly the fact that Emmanuel Macron called for elections in France. I mean, there were questions about whether this delays, having a new Commission president, what it means for green policies, what it means also for the capital markets union. Where do you think the most, significant fault line is?
I think the problem is it does increase uncertainty, doesn't it? I mean, it doesn't forever, of course, because there are election date, but it does increase uncertainty at a time when European markets, global markets, but Europe as well, has done quite well in the last 4 or 5 months. So you've had quite strong markets. You've had an interest from global investors with some nice positive inflows into Europe in recent weeks. And now we've got this big uplift in uncertainty. And I think that's what markets really haven't liked.
So what's the catalyst for markets going forward?
Well, I think there's a few key things, isn't there? One of them is what happens to interest rates. Now, we've seen the ECB cut, but quite a hawkish cut, let's say. So confidence in the direction of interest rates is obviously super important. That they do still come down on a sort of maybe quarterly path from here, giving the market a bit more confidence, that's key. And the other thing is just purely activity. In fact, I would argue activity, although I put it second, is actually the primary driver of global markets. And we've had rates stay a little bit higher for longer this year, but equities have done well, and they've done well because of better activity growth. So I think still getting the good data coming through is really important as well.
When's the next ECB cut? How difficult is it? Because you're right, it was a hawkish cut, and actually a lot of the governors are also saying, let's wait and see. There could be an uptick. Like, we're not sure how inflation pans out.
No, and nobody is, are they? And central bankers, economists, academics have had it wrong, really, in the last few years. Inflation proved to be much more sticky initially, then it came down, and now it's proved a bit more sticky again. So there's a lot of uncertainty around it, but we do think they'll do 2 more cuts this year. They're cut at a quarterly pace, so September and December is most likely. And then we do think a few more cuts into 2025 as well. And Lagarde clearly pointed, even though she wanted to make it clear that this isn't necessarily going to start of a whole string of cuts immediately, she did make it clear the direction is likely downwards from here.
Do you worry about, this was the topic of 4 or 5 months ago, is actually if rates stay at these kind of levels, we're going to see damages in the economy. I don't know whether the employment figure in the UK is part of that, because that's largely been dismissed in the markets.
Yeah, look, I actually think that rates at this level has quashed demand a bit in Europe and the UK. I mean, to your point on unemployment starting to rise in the UK, manufacturing in Germany has been in the doldrums, really, no growth at all for the last couple of years. So absolutely, I do think there's a lot of evidence that higher rates in Europe have quashed activity. But they've needed to quash activity to bring down inflation. But if you do feel that inflation is on a downward path for lots of reasons, then you can start releasing some of the quashing of activity that we've had.
So where do you see value? Is there anything that looks particularly attractive right now?
Oh, look, this is a great question, a really, really good question, because if you'd asked me 8-9 months ago, I'd have, slammed the table. Europe was, in fact, very, very good value at the time, below average valuations on every single measure you should look at. Now it's more like average, maybe even slightly above, sort of 20 or 30-year average PEs, etc. So it's not super, super cheap anymore. And, of course, there's risk and uncertainty. We've just been discussing the French elections. But I do think there are certain sectors, banks and energy, for example, are 2 sectors which still trade on dividend yields of 5, 6, 7%, which is incredibly high. They are often still buying back shares. They've still got a bit of growth. They're linked into global activity being OK as interest rates come down. So actually, I do feel there are pockets of value. And, of course, things like tech, It's not value, for sure, but it's got the growth that we talked about before.
But Sharon, do you think companies will have to work that much harder with dividends and share buybacks to keep investors happy if they're based in Europe?
I think companies absolutely have been working hard in the last couple of years. I mean, dividends, the funny thing is we haven't had much economic growth, but we have had pretty good earnings growth, actually. Companies have liked a bit of inflation. And what they've done is they've paid investors back with dividends and buybacks increasingly. European companies never did buybacks. I used to spend all my time explaining to US investors why European companies just didn't do this. They couldn't understand it. But now, all of a sudden, European companies are doing buybacks. They're giving back investors both dividends and they're buying back shares. In fact, if you take, say, the energy sector or the bank sector, they're giving you back as a shareholder 10% of your market cap through dividends and buybacks. And this is a complete transformation for these companies. So I would argue, yes, they will need to, and yes, they're already doing it.
Sharon, thank you so much. Sharon Bell, Senior Strategist at Goldman Sachs, stays with us. We'll have plenty more, of course, on the rest of the world, but also the UK. Coming up, we're going to bring you a deep dive into Hong Kong's property slump. That's next, and this is Bloomberg. Now, Hong Kong's deepening property slump is about to reach its 5-year mark, the longest retreat since the depths of the SARS crisis more than 2 decades ago. Well, Bloomberg Intelligence estimates at least $270 billion has been erased from real estate values in the city since 2019. Well, our Asia investing editor, Russell Ward, joins us with the very latest. Russell, thank you for being here. Now, what makes the current property slump a little bit different to some of the earlier downturns?
Hi, Francine. Yeah, I mean, it's no secret that Hong Kong has had property slumps over the years. But, it's always bounced back. It's been regarded as being unsinkable. But this time it's different. There are questions actually whether it will bounce back. And that's really mainly because of the diminished status of the city as a financial hub. It's no secret that President Xi Jinping's, security law that he's introduced, the COVID restrictions that were bungled. We've had an exodus of foreigners and also locals as well. The population has been declining, and so really there's been a lot of pressure on the property market because of those outflows, and really looking forward to the outlook for the city, it's not looking bright. We just had some news this week about questions over the rule of law in Hong Kong, with some foreign judges leaving the city. So that's not really good for the city as a status for its status as a leading financial hub, and that's really adding to the downturn sentiment in the property market, both on the housing side and also in the commercial property sector as well.
So, Russell, why has policymakers not done more? Again, we were waiting for Big Bazooka or something. I know that the government tried to, for example, scrap stamp duties earlier this year, but has it had the effect they wanted?
Yeah, I mean, there was a short-term boost in sales anyway. So what they did was in March, they scrapped extra property taxes, and so that actually led to a bit of a frenzy in sales. But the key thing with that was that these sales of new home units were being sold at a discount. So these property tycoons, the famous property companies like CK Asset and Henderson Land, were selling these brand new projects. People were flocking to them, but unfortunately they were being sold at a lower price. So we're still seeing this funk in prices, and in effect the sales have also been coming off in the past few weeks as well.
Russell, thank you so much. Our Bloomberg Asia investing editor, Russell Ward. Now let's go back to Sharon Bell, Senior Strategist at Goldman Sachs. Sharon, I want to ask you about property and maybe some of that space in Europe, but also the effect of the China rebound, which is there or not really there. We're uncertain what kind of path they go towards, especially in a U.S. election bashing China year, and what that means for Europe.
Yeah, look, Europe does have quite a lot of exposure to China, both indirectly and directly. Maybe about 10% of European company sales are direct to China. So it is quite important. Not only that, as you say, if Trump were to put more tariffs on China or Asia in general, then you will likely see more goods from China come into Europe and compete with European producers. So yes, I do think there's quite a lot of competition there.
Is there a way, I mean, how do European companies, is there something that they can do to fight back?
Well, I mean, they would argue that they have they've moved into China in the last couple of decades because it offers more growth than Europe. Yeah. So I think the exposure to China per se is not necessarily a bad thing. And of course, if China's moving up the value chain, importing more into Europe, Europe can also innovate and improve, and in that sense fight back against China. Another way, of course, is European companies moving their businesses to other growth places. For example, with a group of companies in Europe which are exposed to India, which is growing fast. So, you know, there are lots of different ways that European companies can diversify, let's say.
And Sharon, what do you do with real estate? Again, this has been, one of the hot topics for the last 6-7 months. Is it something that you just wait and see what happens? I
think we're probably in that camp. We'd be neutral on real estate in Europe. It's a tricky one because valuations are really low now. So they definitely, you asked me before what value pockets there are in Europe. Real estate is almost certainly one of those. But what you really need to see is, again, more confidence in the path of interest rates. We did have a cut from the ECB, but it was quite a hawkish one. So I think you don't have that confidence yet.
So if you look at almost country by country, or Southern Europe compared to Northern Europe, do you also have a bias of actually Southern Europe looks more attractive?
Well, I mean, not necessarily on property, but if I think about Southern Europe, there are some attractions to it at the moment. It's got more of the recovery fund monies to spend over the next couple of years, which has been great. Growth has been a little bit better in Southern Europe, particularly in Spain. So I think, and Southern Europe, again, hasn't been in such a weak manufacturing position as, say, Germany. So I do feel Southern Europe. And the other thing, I guess, is we haven't seen sovereign spreads widen out. We did a little bit yesterday, but generally we haven't seen the sovereign spreads widen out, so people don't put a big risk premium on Southern Europe at the moment. So, yes, probably slightly more attractive.
And this is all Southern countries. I mean, some of them put more structural reforms than others. Do you make a difference, or is it more of a block?
Yeah, I mean, you've seen, Greece has really changed in the last couple of years, which is fantastic. Spain has seen fantastic growth. I mean, it's the one place, if you looked at the GDP numbers of Spain, you'd think you were looking at the US in terms of the pace of growth. Very, very different from the rest of Europe. So I would say Southern Europe's in a better position generally. I guess we would still worry structurally about Italy. Yeah. Its debt level is very, very high, for one thing. Its demographics aren't as good either.
Sharon, thanks so much. Sharon Bell, Senior Strategist at Goldman Sachs, stays with us. We'll talk UK next. This is Bloomberg. Welcome back, everyone. UK employment actually rising again. This was pretty much unexpected because that's the highest in more than 2.5 years. Pay pressures are easing, and that keeps the Bank of England on track to cut interest rates later this year or possibly sooner. So here to talk about the UK, let's get straight to Sharon Bell, Senior Strategist at Goldman Sachs. Sharon, thank you so much for sticking around with me. When you look at UK, the employment figures were a bit of a wow moment, right? Because they rose more than expected at a time where we're not hearing from the Bank of England at all because the election is July 4th, and we're also going through the manifestos.
Absolutely. And, actually, unemployment, this one figure, as you say, was a bit of a surprise, but the last few figures have shown unemployment ticking up more than expected. So I think this is part of a series of figures that show this higher unemployment. And of course, the good news for the bank, though, and the economy, I would argue, is that wage inflation is starting to slow a little bit. And that does give them the room, ultimately, to cut rates.
Do you think that they could be already a little bit behind the curve? I know they were probably behind the curve in raising rates. Is there a risk that they do the same on the way down?
This is the problem, and this is always the problem of being data dependent, because you're data dependent for the data today, and not necessarily the data in 6 months' time, which is really when interest rates are going to affect things. But I don't think they would regard themselves as behind the curve. Yes, unemployment's ticked up, but it's still relatively low versus, say, the last 30 years. We're not at a high level. And yes, wage inflation is coming down, but it's still relatively high. So I think they probably regard themselves as right to be cautious.
I mean, today we're also looking at manifestos from both parties. Is it quite incredible that there's not that much market reaction yet because they're quite similar, or what do markets make of it?
Well, I think that there's probably two reasons why there wouldn't be much market reaction. First of all, given the polling data puts the Labour in so much of the lead, it doesn't feel that there is, that outcome feels very priced, I would say, by the market, given that lead in the polling data. One reason. The other reason is there's not a lot of difference in their ultimate fiscal policy. Yes, there are a few different tax rinky-dinks they can do, each party, but ultimately they are both under the same fiscal constraints.
So are you, attracted to UK assets, or there needs to be more growth and risk-taking?
Yeah, I think I quite like FTSE 250, which is your classic quintessential UK asset in many ways, because FTSE 100 is a global asset. I don't dislike that. It's got lots of those banks and energy stocks I was talking about before, which are buying back shares and doing dividends. But the 250, the mid-cap stocks, it trades at a relatively low valuation versus its history. It is in that cheap camp, that bucket. And I do think UK economic activity will be okay, even with this tick up in unemployment. And I think as rates come down, that will support those stocks as well.
Okay, so interesting. Sharon, thank you so much for being with us today. That was Sharon Bell, a senior strategist at Goldman Sachs. Now, coming up, the UN adopts a U.S.-crafted truce deal as Secretary of State Antony Blinken arrives in Israel. We'll have plenty more on the ongoing ceasefire talks. Next, we also have our D.C. bureau chief, who's in London for a couple of days before she travels onto G7. So I'm looking forward to hearing from the election campaign there in the U.S. and what happens in November. This is Bloomberg. Well, Apple unveils new AI features, including a partnership with ChatGPT. Elon Musk responds by threatening to ban Apple devices from his companies over security fears. More record highs on Wall Street as traders position ahead of the U.S. inflation data and the Fed decision. Tomorrow's a big day. Plus, UK unemployment rises unexpectedly to the highest in more than 2.5 years, while pressure eases for higher private sector pay, suggesting that inflationary forces are cooling. Well, good morning, everyone, and welcome to The Pulse. Happy Tuesday. I'm Francine Lacqua here in London. A couple of things we need to watch out for is, for example, Olaf Scholz and President Zelensky focusing today on a European recovery effort. The focus of today, and you can see actually Chancellor Scholz live from Berlin, actually the focus is on the battered energy infrastructure in Ukraine. So this conference is bringing together government officials and company executives and really follows some pretty similar meetings, I believe, in 2022 in Italy and then London last year. Now, let's get to the U.S. elections. And jurors in Delaware are deliberating if President Joe Biden's son, Hunter, is guilty of illegally buying and possessing a gun while on drugs. Now, Biden's defense argued that he did not knowingly violate the law because he may have thought that he was clean at the time he purchased the weapon. It comes less than 2 weeks after his father's chief rival for the presidency, Donald Trump, was found guilty by a New York jury of 34 counts of falsifying business records late last month. Now, for more, we're joined by Bloomberg's D.C. bureau chief, Peggy Collins. Peggy, this is such a treat to have you in London. I know then you're making your way to the G7, but you say the election campaign has started in a new phase. Why do you say this?
Well, I think it's for two reasons, Francine. One is the fact that while Trump was going through the trial for weeks in New York, he had to actually be in the courtroom at least 3 days a week. So he was constricted in terms of how much he could campaign around the country. And we saw this weekend that as soon as the trial wrapped and he was convicted, he was out on the campaign trail again to Las Vegas, Nevada, one of the most competitive states that we have in this election. The other reason is cash. So one of the things that Biden has had an advantage on for most of this year is campaign fundraising and cash. At one point, he was more than double in terms of Trump, in terms of cash haul, over $100 million raised. But Trump, after the days of the trial verdict, raised $50 million and has continued to raise some cash over the past week or so. So that gap is closing in terms of an advantage between Trump and Biden.
So, Peggy, is this Wall Street cash? Is this big donors like Steve Schwarzman that, finally put his weight behind Donald Trump? Or is this, mom and pops kind of believing in Donald Trump as a candidate?
It's both. They've been able to raise quickly from grassroots donors online. And then, as you said, Francine, we've seen some very big donors start to turn towards Trump in just the last few weeks, including on Wall Street.
So do the voters care about these trials?
They do. They do. One of the things that we've been reporting after Trump's conviction is that it could have an effect on that very slim number of people who are really independents in the middle in terms of they haven't decided yet. There are obviously a lot of independent voters in the states. but there are many voters who have already decided on one side or the other, and the conviction for Trump could have an effect on those voters. And on the Hunter Biden trial, we are expecting that a verdict could come as soon as today. The jury is deliberating, as you said. That obviously isn't President Biden himself, but it certainly is in the media and has been a touch point for some of Trump's base.
So for Donald Trump, is there, for example, females between a certain age group that are more likely not to vote for him because of the trial, or is it impossible to break down?
I think it's difficult to break down, but I will say that the women vote for Trump has been one of the big question marks of this entire election year. That is in part because of reproductive rights and abortion rulings, and because in some of the most competitive states, like Florida, like Arizona, like Nevada, there's the potential for a ballot measure to be on Election Day related to abortion. And some of the Democrats feel like that may actually increase turnout, particularly among women, and hurt Trump potentially.
Peggy, if the vote were tomorrow, who would win?
Well, I don't know, again, because we're not in the minds of every American voter. But in terms of our polling, we've had a swing state poll since last year at Bloomberg. And what it's continually showed is that the race is won very close in the 7 most competitive states, but that Trump is leading in most of the swing states as of today, as of our latest polling in May.
So Nebraska, I mean, I've had French viewers saying, Nebraska? Where is Nebraska? I mean, Nebraska it could be actually a very, very important state.
It's really interesting, Francine. So we were just talking about those swing states, and the Biden campaign has been looking very closely at northern states, what we call the blue wall. That's Wisconsin, Michigan, Pennsylvania. And because of changes in population, one city in Nebraska called Omaha, where Warren Buffett is from, could actually come into play because that one electoral vote in Nebraska could be pivotal in this election.
I mean, is it mainly, what kind of demographics does Omaha have? They're not all Warren Buffett.
That's right. That's right. Well, some of the Midwestern states like Iowa and Nebraska do tend to be older in population, but a lot more young people have stayed there over the years with work from home and cost of living. And also it does tend to be a more liberal city, Omaha, because of the way it's changed over the years.
So I'm going to take advantage just because you're here. And we keep on, hearing of people saying, look, Donald Trump and his team are just very good at campaigning. They did it the first time around. They hit the right spots. He's tireless. How's the Biden camp doing?
Well, I think they're both working around the clock at this point because we only have a few months to go. I know here in Britain you only have a few weeks to go, but in the U.S. we only have about 5 months to go. So it really is reaching a crescendo phase here now. But we are expecting the first debate between Trump and Biden to be in just a couple of weeks at the end of June. So they are prepping for that, and that will be a pivotal moment.
I mean, it's just incredible. You're right in terms of the length of time, but also the amount of money in the U.S. election campaign is just incredible compared to Europe. Peggy, thank you so much for joining us. Bloomberg's D.C. Bureau Chief Peggy Collins here in London and then traveling to the G7. Now, U.S. Secretary of State Antony Blinken says the Israeli Prime Minister Benjamin Netanyahu has reaffirmed his commitment to a U.S. ceasefire plan. Let's bring in Jumana Bersace, our Horizons Middle East and Africa anchor. Jumana, great to speak to you. I mean, Secretary Blinken is on his 8th visit to the region since October 7th. Are there any hope for a way forward to a ceasefire?
That indeed is the question, Fran. Good morning to you. So Secretary of State Antony Blinken is making his 8th trip to the region since October 7. He was in Egypt yesterday meeting with President Sisi. Gave a little talk to reporters afterwards saying that Hamas were the main obstacle to getting the ceasefire deal over the line. He then continued with his trip on to Israel, meeting with Israeli Prime Minister Netanyahu alongside Defense Minister, in addition to Benny Gantz, of course, who was the key government member who quit Netanyahu's government over the weekend. So meeting with a broad range of voices over there. He just delivered a press conference in Tel Aviv saying that the Prime Minister Netanyahu had reaffirmed his commitment to this Biden truce proposal. And so what we're hearing now is there has been some progress made on at least this phase 1 of the proposal. Phase 1, as a reminder, would include the exchange of some hostages, the release of elderly women and children who have been held in Gaza territories in exchange for some Palestinian prisoners, in addition to a 6-week ceasefire. But the big question remains as to what is going to happen in phase 2. And this is where there's still a lot of daylight, because phase 2 would entail a permanent ceasefire. Israel are saying that they're not going to commit to a permanent ceasefire until all hostages are released. Hamas are saying that they're not going to agree to a permanent ceasefire unless Israel provides some solid commitments that they will not continue with a ground offensive. So still some daylight, but a little bit of progress has been made in this trip.
So, Jumana, the UN Security Council also passed this resolution endorsing the ceasefire plan from the U.S. Again, how will this play out?
So that was a big development yesterday, Fran. 14 members of the Security Council voted in favor of the resolution put forward by the U.S. Russia did abstain, which is notable in itself because now you are getting sort of a worldwide movement in support of this Biden three-point plan. It should be said, however, that since October 7, the UN have really taken a bit of a backseat. It was only until a couple of months ago that the US themselves were shooting down these ceasefire proposals. And so it's unlikely to have that much of an impact. However, it does tell you that the US have been successful to a certain degree at mobilizing support from around the world. And if indeed Biden does succeed at getting this deal across the line, it could be construed as a political win for Biden himself into those elections that you were just talking about.
Jumana, thank you so much. Bloomberg's Jumana Brzecia there in Dubai. Now, the Ukrainian President Volodymyr Zelensky is also, as we're seeing live pictures, addressing a two-day international conference on the reconstruction of Ukraine in Berlin. Now, the German Chancellor Olaf Scholz and the European Commission President Ursula von der Leyen are both in attendance. Governments, executives and investors are really already preparing for a reconstruction program in Ukraine that the European Investment Bank estimates could amount to more than $1 trillion of public and private capital. Now, this is the front-facing. When you speak to a lot of investors on background, they say it might be a little bit too early, given all of the questions and the concerns on the ground in Ukraine. Let's listen to the president of Ukraine.
Engaged in the effort to withstand the attempt to drive a wedge between the countries of the democratic world. We are fighting for humanity in the world, to allow the people in the country to continue to live a normal life, to show endurance, to prevail, to win the war. That is the kind of resistance we've shown. Resistance in all areas, in the military area, in protecting the country, in showing resistance also as members of civil society in the face of the battle and the war that is being waged. To continue to pursue a European lifestyle, a lifestyle that is being demolished and destroyed wherever Putin is active, wherever Russia places its foot. It begins with the division and hybrid warfare, as has been the case in Moldova and Georgia, and later we witness a total war like the war against Ukraine. The front plays an important part. In 2 years of war, Ukrainians have proven that they are able to withstand the attacker and to advance in that area. We can force them to withdraw. We have regained the Black Sea, and we have furnished proof, thanks to the modern air defense system, that we are capable of bringing down Russian missiles. Now, what is important? Key abilities in order to be able to place Russia at a disadvantage and rob them of the strategic advantages that it has had. Advantage with regard to the airspace is therefore important, defending us from missiles and attacks by the air.
Of course, we'll continue covering this conference in Berlin. Coming up, we take a look at why the UK Prime Minister Rishi Sunak is facing last-minute calls by cabinet ministers to change the Conservative manifesto. That's next, and this is Bloomberg. Now, the UK Prime Minister Rishi Sunak faces last-minute calls by cabinet ministers to add new tax cuts and a tougher migration policy to the Conservative manifesto. Well, Bloomberg understands that early drafts provoked disquiet over the lack of big-ticket pledges that might prevent a heavy defeat ahead of the general election on July the 4th. Well, Bloomberg's Phil Aldrich joins us now. We also go to Anna Andrade from Bloomberg Economics shortly on the latest UK wage data. There's a lot going on. I mean, for a country that's relatively quiet compared to the EU elections, and Phil, thank you for joining us. So what is this manifesto for? Because the Tories, Phil, are so far behind in the polls, election a reminder, July 4th, that what are they trying to do with it?
Well, you got to remember that, yes, because they're so far behind in the polls, they're playing catch-up. They're trying to get people's attention. And Labour, so they've got two different manifestos this week. We're going to see the Tories, which is going to be chock-a-block full of policy ideas, and Labour, which there'll obviously be some interesting policy stuff in there, but predominantly they just don't want to rock the boat. They're ahead. Their goal is to keep going steady, and the Tories need to just catch people's eye. And so, yeah, and they need to both pick people from the right, so the reform, the voters who are shifting to reform, and keep the centre ground. It's a very difficult needle to thread.
So it feels like there's like 5 Conservative parties within the Conservative Party, right? Who's calling the shots on the manifesto? I mean, of course, Rishi Sunak, but then who's he trying to please?
Well, there's a lot of advisors behind the scenes who've been sort of tinkering away at the details. He's going to be trying to win over the sort of. He's going to show that people should have faith in Tory capitalism. The home ownership issue, which is very much a Margaret Thatcher, Nigel Lawson type idea. He's going to be pushing for that. He's going to go for lower tax cuts, so working families. He's saying that he's going to say welfare needs to be trimmed to pay for all of this. So it's kind of a strivers, not skivers type of message, which appeals to the right. And then he's going to go to the migration issue. He's going to put caps on migration, we think, and so that's obviously an attempt to bring that part of that wing of the party in as well. So it's very difficult. He's going to try and grab them all, right. But he's got a lot of work to do.
And they've been in power for over 13 years. So you kind of think, the latest manifesto, is that what people are really voting on? We're no spin doctors, but maybe common sense dictates.
It's a track record issue, isn't it? I mean, and incumbents everywhere are across Europe and America are getting voted out. People are want a change. They want change, and here in the UK that seems pretty clear.
And one of the things that people will be looking at is of course the employment figures, which was worse than expected. I mean, what does that mean for Bank of England? But what does that also tell us the state of the economy is?
Yeah,
Let's go to Anna, then I'll get you in, Phil.
Sorry, yeah, so in today's data, I think the most important point for the Bank of England will be really the wage print and the private sector wage growth, and that came in below what we expected, and it leaves the forecast. The BOE doesn't produce monthly forecasts, but it leaves the quarterly forecast on track for the second quarter. And that's good news, because there was a bit of a threat that this month in particular, April, because we saw the increase in national living wage, and because a lot of pay settlements come through, there is a bit of a threat that it would actually be a sticky one. But this data showed that the trend in wage growth is down. That's reassuring for the BOE, although it's unlikely to be enough. What the BOE needs to see as well is services inflation sort of ticking down as well.
Anna, can you give me a sense on whether that brings forward the likely cut? I know the Bank of England, a lot of commentators say they were late to hike. Are they now too late to cut if the data keeps on getting worse?
No, I mean, I don't think so. I mean, obviously June could have been sort of the earliest window to cut, but now because of the election, it's not going to be. And I think, like, in terms of, I mean, the labor market is loosening, and the Bank of England will sort of, react to that, and that supports our view that, probably the Bank of England will cut by more than markets expect. But I still think that there's a big sort of question mark around, whether inflation is on a durable path to 2% or not. And the wage growth series have been volatile, so, the Bank of England will want to wait for headline inflation to come to 2% and then cut after. So I think, we're talking about August here, so it's not, a major delay in terms of cuts. So there's not a major risk in terms of a policy mistake.
So, Phil, how would you describe? I mean, if the economy is slightly, going through not a downturn but a softening, it was maybe the right call to call election July 4th on the Tory party.
Yeah,
side.
I think history may judge that it was a bit of a mistake. Doesn't look to have been working particularly well. But I mean, the wage, the labour market data today, actually, I would have thought would give Rishi, good reason for a little bit of a boost. He's, real wages are rising now for 10 or 11 months in a row. The fact that there is a softening in the labour market, but unemployment still remains relatively low historically, suggests that the Bank of England can bring forward those rate cuts. Maybe he should have waited so that people could actually have experienced those rate cuts and the rising, a few more months of rising real wages. But
I'm so glad we're not spin doctors. I mean, it's kind of like impossible to call. Yeah. An economist is a hard enough job. Phil and Anna, thank you both for joining us. Phil Aldrich and Anna Andrade from Bloomberg Economics. Coming up, EU leaders are eager to resolve top jobs after the election. Now, what happened in France, does that complicate the negotiating? We'll do that next. This is Bloomberg. Now, after Ursula von der Leyen's party won the most seats in the EU elections, she'll be looking to clinch a second term as European Commission president. That's as EU leaders look to resolve top jobs talks as soon as possible. Well, joining us now is Bloomberg's Oliver Crook, who's in Berlin. So the problem, Ollie, is that this is like horse trading. She has enough seats, but she doesn't necessarily have the majority of the heads of state. So what kind of trading is going on behind closed doors?
Yeah, that's right, Francine. So the EPP came out really the dominant force politically in the European Parliament. But as you know, Francine, in European politics, nothing is quite that simple. So what happens now is the horse trading. But first, what needs to happen before that is within the groups of the Parliament, where will each of these parties sit? And there was a lot of attention being paid to the AfD, the Alternative for Deutschland, which did very well, now commands 15 seats. Remember, they were ejected from the far-right group of the EU Parliament ID group because one of the leaders of the AfD was saying that basically not all members of the SS were criminals. They have since booted him, again, in order to try to clean up that party, in order to make it fit in one of these blocks. What I think is interesting, Francine, is at the national level, because this comes down to leaders as well, Macron is not even close to as emboldened as he was previously. Remember, he was floating around Mario Draghi as a possibility. And of course, the sort of national leader with the greatest mandate out of this is Giorgia Meloni. So these are the two sort of interesting factors injected into the conversation about EU Commission president.
But in terms of timeline, does it also just postpone everything because Macron is busy with a little election around the corner?
Yeah, well, listen, that definitely complicates things. I mean, I think it's a very interesting move by Macron. I think there's different ways of sort of viewing it and what the sort of possible outcome is. I think that Macron, in part, is relying on this sort of historical tradition in France to sort of barricade the National Front, as it was once called, now the Rassemblement National. Also, maybe on the idea that people in France are willing to vote for something at the EU level, but not the national level. But I think that it doesn't take into account some of the other points, which is this is a legislative elections. It's not seen as high stakes. Maybe people are more willing to take a little bit of risk there. So this is all sort of coming to a head. And Francine, in only 2 weeks' time, he doesn't have that much time to change the electorate's mind.
He doesn't. Let's see what happens. Thank you so much, our Oliver Crook there in Berlin. Now, Bloomberg Brief, it's up ahead. They'll have full markets roundup. There's also a conference going on in Berlin with Vladimir Zelensky and, of course, Olaf Scholz, the German chancellor. Then we look at markets. It's going to be a big day tomorrow. We have Fed, and then we have some data in the U.S. Von der Leyen, the president of the Commission, speaking at the Ukraine Recovery Conference right now. This is Bloomberg.